Today we're going to take a closer look at an important topic that has recently been circulating in financial and geopolitical discussions involving Iraq and the broader Middle East energy market. The issue centers around comments suggesting that the Strait of Hormuz had been closed or severely restricted, and what that might mean for oil exports, regional stability, and ultimately the economic outlook that influences Iraq's currency environment. To understand why this discussion matters for followers of the Iraqi Dinar, we first need to step back and examine the role that the Strait of Hormuz plays in the global economy. The Strait of Hormuz is one of the most strategically important maritime passages in the world. It serves as a narrow gateway connecting the Persian Gulf with the Gulf of Oman and the wider global shipping routes. A significant portion of the world's oil supply passes through this channel every day, including large volumes exported from Gulf countries such as Iraq, Saudi Arabia, Kuwait, and the United Arab Emirates. Because of its importance, any rumors, statements, or reports suggesting a closure or disruption of this shipping route immediately attract the attention of global markets, governments, and investors. Even temporary disruptions can influence oil prices, shipping insurance costs, and the operational decisions of energy companies and tanker fleets. In the comments referenced in the news update, there was a suggestion that the Strait of Hormuz had been closed or at least significantly restricted. However, the clarification that follows indicates that while traffic may have been reduced for commercial tankers, the waterway was not fully shut down. That distinction is extremely important. A partial slowdown in traffic due to security concerns or logistical factors is very different from a complete closure, which would represent a major geopolitical and economic crisis. In many situations involving strategic shipping lanes, reductions in traffic occur because shipping companies temporarily adjust routes, insurance providers raise risk premiums, or naval forces implement security protocols. These measures can lead to fewer vessels moving through a region for a period of time, even though the road technically remains open. According to the information in the statement, traffic for commercial tankers had been reduced, but the situation was already being addressed through increased naval activity. When major naval powers increase patrols or escort operations in a region like the Strait of Hormuz, it is usually intended to reassure shipping companies and stabilize maritime traffic. Such operations are often coordinated with international partners to maintain the free flow of global trade. Another key element mentioned in the statement relates to insurance issues. Maritime shipping relies heavily on insurance coverage, particularly when vessels are traveling through regions considered to have elevated geopolitical risk. If insurers temporarily raise premiums or suspend coverage in certain zones, tanker operators may pause operations until those insurance arrangements are clarified or resolved. The update indicates that insurance issues had already been addressed. That is an important signal for energy markets, because it suggests that shipping companies are likely to regain confidence in operating through the area. Once insurance coverage stabilizes, commercial shipping activity typically resumes more smoothly. For followers of Iraq's economic developments, this situation connects directly to the country's reliance on oil exports. Iraq's national budget is heavily dependent on revenue generated from crude oil sales. Any disruption to global shipping routes that affects oil transportation could potentially influence export volumes, government revenues, and overall fiscal planning. However, it is equally important to recognize that Iraq has diversified export routes and logistical systems designed to maintain energy shipments even when regional conditions fluctuate. Additionally, the global oil market has a strong incentive to keep critical transit corridors operational, which is why international attention and resources are quickly directed toward maintaining security in these areas. The final part of the statement emphasizes that a long-term closure of the Strait of Hormuz is highly unlikely. This assessment aligns with the general consensus among many geopolitical and energy analysts. Completely closing such a vital maritime corridor for an extended period would have enormous economic consequences, not only for the countries that export oil through it, but also for global energy markets and major importing nations. Because of these potential consequences, there is usually significant international pressure to ensure that the strait remains operational. Military patrols, diplomatic engagement, and coordinated security efforts are often deployed quickly whenever tensions arise. From a financial perspective, markets tend to react strongly to initial headlines about disruptions, but often stabilize once clearer information emerges. Oil prices may briefly spike when traders fear supply interruptions, but if shipping lanes remain functional and exports continue, those price movements typically moderate. For Iraq, fluctuations in oil prices can have both positive and negative implications. Higher oil prices can temporarily increase government revenues, which may strengthen fiscal capacity. However, volatility can also create uncertainty in long-term budget planning and investment strategies. When discussing the Iraqi dinar, it is important to remember that the value of a national currency depends on a broad combination of economic factors. Oil revenues are certainly a major component for Iraq, but they are not the only factor influencing currency stability. Monetary policy, foreign reserves, inflation management, government reforms, and economic diversification all play important roles. The Central Bank of Iraq focuses heavily on maintaining financial stability and controlling inflation through its monetary policy framework. This includes managing foreign currency reserves, regulating liquidity in the banking system, and supporting confidence in the domestic financial sector. When oil exports remain stable and government revenues continue to flow, it strengthens the country's fiscal position and helps support overall economic confidence. That confidence can indirectly contribute to currency stability because it reassures investors, businesses, and international institutions that the country's economic system is functioning effectively. However, it is equally important not to oversimplify the relationship between oil market events and currency valuation. Even if oil prices rise or shipping routes remain secure, changes to a nation's exchange rate involve careful policy decisions and broader economic reforms. Currency adjustments, if they occur, typically follow long-term structural changes rather than short-term geopolitical developments. In the short term, the main implication of the Strait of Hormuz situation is related to market sentiment and risk perception. If investors believe that shipping lanes are secure and that oil exports from the region will continue without interruption, then financial markets tend to remain calm. For Iraq, stable export conditions allow the government to maintain consistent revenue streams. That revenue supports public spending, infrastructure projects, and economic programs that contribute to the country's long-term development goals. Another aspect worth noting is that Iraq has been working in recent years to strengthen its economic institutions and improve financial transparency. Reforms in banking regulation, anti-corruption measures, and digital financial systems have been part of broader efforts to modernize the country's economic framework. These types of reforms often carry more long-term significance for currency stability than temporary geopolitical headlines. While regional events can influence markets in the short run, sustained economic progress typically depends on institutional improvements and policy consistency. Energy security is also a major concern for global economies, and ensuring uninterrupted oil supply remains a priority for many governments. Because the Strait of Hormuz plays such a critical role in this supply chain, the international community closely monitors any developments that could affect traffic through the region. The presence of naval operations mentioned in the statement indicates that authorities are actively working to maintain maritime safety and restore normal shipping patterns. In most historical cases, when security measures are increased in response to regional tensions, commercial traffic gradually returns to normal levels once confidence is restored. For viewers who follow Iraqi Dinar news closely, it is important to approach geopolitical developments with careful analysis rather than reacting to rumors or incomplete information. Headlines about closures or disruptions can sometimes spread quickly across social media or financial forums, but verified details often reveal a more nuanced situation. In this case, the clarification that the strait was not fully closed and that operational measures are already underway suggests that the situation is being managed. That does not mean there are no risks, but it indicates that global systems are responding in ways designed to maintain stability. From a broader perspective, the long-term economic outlook for Iraq will depend on a combination of energy sector performance, domestic reforms, investment flows, and regional cooperation. Oil exports will likely remain a cornerstone of the economy for years to come, but diversification efforts are also gradually expanding into areas such as infrastructure development, agriculture, and technology. These structural changes take time, and they unfold through policy decisions, legislative reforms, and partnerships with international organizations. Currency stability tends to reflect the cumulative progress of these broader economic initiatives. As a result, followers of the Iraqi Dinar should focus on verified economic indicators and official policy developments rather than relying solely on speculative narratives. Responsible analysis considers multiple factors, including fiscal policy, central bank strategies, and international economic conditions. Events involving major energy routes, like the Strait of Hormuz, will always attract attention because of their potential global impact. But history has shown that long-term closures of such vital trade corridors are extremely rare due to the enormous economic consequences they would create. For Iraq, maintaining consistent oil exports is essential, and the international energy system is structured in a way that strongly supports keeping those exports moving. When temporary disruptions occur, security measures, diplomatic channels, and market adjustments typically work together to restore stability. In the short term, the information presented suggests that tanker traffic may have slowed temporarily, but that operational efforts are already addressing the situation. Insurance arrangements have reportedly been resolved, and naval operations are helping ensure that maritime activity continues. In the longer term, Iraq's economic trajectory will continue to be shaped by policy reforms, institutional strengthening, and responsible management of energy revenues. Those elements play a far more significant role in shaping the environment that influences the Iraqi dinar than short-lived disruptions in shipping activity. As always, careful analysis and verified information are essential when discussing currency developments or economic trends. Financial markets are complex, and major decisions should always be based on reliable data and professional guidance.